Hello everyone and welcome back to Fun with Fitzy, Chapter 9, Video 3. Let's take a look at different examples. So we're going to look at both the percentage of sales and the percentage of receivables method here. And you should have a handout to go with this. So let's work on it together. In the percentage of sales basis, management indicates what percentage of credit sales will be uncollectible. Now remember, we talked about credit sales because if you've already collected the money, then you have no problem collecting your accounts receivable. You already have it. So we're only looking at credit sales here. And it's based on past experience. Like I said, if you have 10 years and on average, you had 3% uncollectible each year, then you're going to use 3% as your estimate. And it's going to be applied to either total credit sales or net credit sales. And the difference between the two is net credit sales is any returns that have happened, okay? So your company's just going to decide. So let's go through a couple of examples here. Very simple. Fitzy Company had the following random accounts. Cash, $450,000, accounts receivable, $87,800, and credit sales of $740,000. If the company assumes that 1.5% of credit sales will become uncollectible, what will the bad debt expense be? So this is, remember, the percentage of sales method. So what are we going to do? We're going to calculate that. So 0.015 is that percentage when you convert it to a number times $740,000, because remember, we're going to apply it against credit sales. We're going to get 11,100. And so this is the estimate of what we think we will not be able to collect. So what is the adjusting entry? So we've done the math, which is the easy part. So the adjusting entry, remember, adjustments are done on December 31st of the year end. So it's always going to be bad debt expense, 11,100, and allowance for doubtful accounts. Yes, you have to remember this. Now let's take a look at after the adjusting entry is posted. Remember, after you journalize, you need to post to the ledger account. Assuming the allowance account has an opening credit balance of $1,400. So what we're saying here is there's already $1,400 in the allowance for doubtful accounts. Now we're going to post this, so it's a credit. We're going to credit this account again, so 11,100. We're going to have a $12,500 balance in that allowance account. Okay? And that's okay. Remember, in the percentage of sales method, it does not matter. Percentage of sales does not matter what the balance is. In your allowance account. Under the percentage of receivables, it does. You need to keep that in mind. So right now it didn't matter. We did the math. We thought the percentage was 1.5%. Did it. Here's a number, and we put that number directly in the journal entry. Okay, so now we're just putting the balance in here. So again, I'm going to reiterate this. The basis of estimating uncollectibles emphasizes the matching principle, which we all know isn't really a gap anymore, but nevertheless important. And bad debt expense will show a direct percentage relationship to the sales amount. So when adjusting entries are made, the existing balance in the allowance for doubtful account is ignored. We just keep adding to the account. Like here, we just added it. So now we have an allowance account of 12,500. So we can, it's basically our holding tank of money we're not expecting to collect. Okay, so let's look at the next part. So now let's look at the percentage of receivables. In the percentage of receivables, then, management estimates what percentage of receivables will result in losses from uncollectible accounts. Okay, and it can be assigned to receivables and we talked about this, in two different ways. In total, so you just take the total accounts receivable and multiply it by the percentage, or stratified by the age of the receivable, which is the length of time they have been unpaid. This is called an aging, and we talked about this already a couple of slides ago. Aging of the accounts receivable. So if you see here, this is an aging. We call this an aging. So it's a table or something that talks about the number of days you have accounts receivable. So here we have our customers, Vince, Gurpal, Herminder, Navjot, Akshaya, and others. Vince owes us $1,200, Gurpal owes us $6,000, and so on. And if you look at and break it down, this of the $1,200 that Vince owes us, 600 are 31 to 60 days old. 400 are 90, there should be a line here, I don't know why it didn't come through, 91 to 120 days old, and 200 are greater than 120 days. Keep this in mind, as accounts receivables age, as they get older, it's harder to collect. Ages. Okay, so you kind of get a feel for the table, and here's the total amount that we have in accounts receivable by age. So if you look at here, this is why it's called an aging. We're stratifying it by age. So as time goes on, the percentages increase as they will become harder to collect. Okay, so if you have a lot of older ones, you're going to have 75%. These ones we think 75% are going to be uncollectible. But the newer ones we think are going to be easier to collect. So we only put 2% of them being uncollectible. Okay, let's keep our table in sight here. So basically here, if we take 2% times 49, we're going to get 980. If we take 4% times this total, and so on. And if you add this plus this, plus this, plus this, plus this, you're going to get this $12,000. Now these agings don't always look exactly like this, but to give you an idea. So we think here that 12,074 should be the required balance in the allowance for doubtful accounts. Remember, in the percentage of sales method, that number would have been the number we put in our adjustment. But here, when we do the percentage of receivables, that the number we're calculating is the required balance in our allowance for doubtful accounts. So the amount of the bad debt adjusting entry is the difference between the required balance and the existing balance. So what's already in there? So let's look at the questions now. If the trial balance shows the allowance for doubtful accounts with a credit balance of $1,400, so let's say the allowance for doubtful accounts was $1,400, what will the necessary adjustment be on December 31st? So remember, we want our required balance to be $1,274. So we have a number here that we need to calculate. So basically, when you take this 1274 and you subtract 1400 from it, you're going to get that x. And in this case, it's going to equal 10,674. So that's the number here that we're going to put in our adjusting entry. So on December 31st, we're going to have bad debt expense. And it's going to be 10, and we're going to have allowance, our allowance, I'm going to just write that, for doubtful accounts. Is going to be 10,674. Okay, so after the adjustment now is posted, what will the balance be in the allowance for doubtful accounts? Well, we just did that math there. We had 1,400. We are going to post this into the account now. It's going to be, so our balance should be 1274. Oh, cool. That's what we want it to be. Remember up here? This number that we calculated when we did all of our percentages is the required balance. So there we have it. This is our required balance in our allowance for doubtful accounts. Okay, by now you should be able to estimate bad debts for that adjusting entry at the year end using both the percentage of sales method and the percentage of receivables method. Remember, when calculating the percentage of sales, that's the number you're going to use directly in the adjusting entry. And when calculating the percentage of receivables, the number you get in that calculation is the required balance in your allowance for doubtful accounts. If you remember that, you should be good. Hope that helped. Thanks for watching. Talk to you soon.